Not all real estate investments are created equal, and choosing the wrong strategy can cost you years of wealth-building momentum. In this video, we're ranking the best real estate investments for beginners using consistent metrics: cap rate, cash-on-cash return, and long-term appreciation potential. Let's cover the fundamentals before we score anything. Cap rate measures a property's income potential independent of financing. It's net operating income divided by purchase price. NOI means your annual rental income minus all operating expenses, excluding your mortgage. Cash-on-cash return measures what you actually earn on the cash you invested, annual pre-tax cash flow divided by total cash out of pocket. Now, let's rank each real estate investing strategy. Strategy 1. Single-family rentals. Single-family rentals are the most common entry point for beginner investors, and for good reason. On a $250,000 property with 20% down, that's $50,000, a mortgage at roughly 7% runs about $1,330 per month in principal and interest. If market rent is $1,900, subtract vacancy at 5%, CapEx reserves at 5%, property management at 10%, plus insurance and taxes, your true net cash flow typically lands around $150 to $200 per month. That's a cash-on-cash return of roughly 3 to 5%. Modest, but appreciation and loan paydown add meaningful long-term wealth. Ease of entry, high. Scalability, moderate. Wealth building power, solid but slow. Strategy 2. House hacking. House hacking means buying a small multifamily property, a duplex, triplex, or fourplex, living in one unit and renting the others. Because you're owner-occupying, you can use FHA financing with as little as 3.5% down, but this only works if you actually live in the property. On a $350,000 duplex, tenant rent can cover most or all of your mortgage, dramatically reducing your living costs while you build equity. Ease of entry, very high. Scalability, moderate. Wealth building power, exceptional for beginners, one of the highest leverage moves in real estate. Strategy 3. Small multifamily, 2 to 4 units. Small multifamily properties generate more income per dollar invested than single family, and they still qualify for residential loans if you own 4 units or fewer. A fourplex generating $5,200 per month in gross rent with a 7% cap rate can offer meaningful cash flow even after full expenses. Ease of entry, moderate. Scalability, high. Wealth building power, strong, where many investors accelerate portfolio growth. Strategy 4. Short-term rentals. Short-term rentals, furnished properties rented by the night, can generate 2 to 3 times the gross income of long-term rentals in the right market. But operating expenses are significantly higher: furnishing, cleaning fees, platform fees, and much higher management overhead. The risk is real. Local regulations can change and eliminate your income model entirely. Ease of entry, moderate. Scalability, low to moderate. Wealth building power, high upside, high variance. Treat this as active income, not passive. Strategy 5. Commercial real estate. Commercial properties, office, retail, industrial, and apartment buildings with 5 units or more are valued primarily on NOI, not comparable sales. This means you can force appreciation by raising rents or cutting expenses, a powerful lever unavailable in residential real estate. But commercial loans typically require 25 to 35% down, shorter terms, and stronger financials. The barrier to entry is much higher. Ease of entry, low. Scalability, very high. Wealth building power, the highest ceiling on this list. Strategy 6. REITs. Real estate investment trusts let you invest in real estate through the stock market with no property management, no loans, and no minimum beyond a single share. REITs are required by law to distribute at least 90% of taxable income to shareholders, which creates consistent dividend-based passive income. But you don't control the asset, you can't use leverage strategically, and returns have historically trailed direct ownership over long periods. Ease of entry, very high. Scalability, very high. Wealth building power, moderate. Best used as a complement to direct ownership, not a replacement. The ranking. For pure wealth building power, commercial real estate wins, but it's not where most people should start. For beginners, House hacking offers the best combination of low entry cost, real-world education, and immediate financial impact. Small multifamily sits in the middle, accessible enough to enter, powerful enough to scale. Match the strategy to your capital, your risk tolerance, and your available time, not just the highest projected return. If this breakdown helped clarify your investing path, subscribe for more deal analysis every week.